Welcome back to Smart Dollar Mindset, the channel dedicated to helping you achieve financial freedom through smart money habits and investing. Today we're talking about something that affects almost every part of your financial life, your credit score. Whether you want to buy a house, finance a car, rent an apartment, or even apply for certain jobs, your credit score plays a major role. But here's the truth: most people don't actually understand how it works, why it matters, or how to improve it quickly. In this video, we're going to break down everything you need to know about credit scores. We'll cover what goes into your score, the biggest mistakes people make, and the proven steps you can take to fix your credit fast. By the end, you'll not only understand how your credit score works, you'll also have a clear, actionable plan to raise it and open the door to better financial opportunities. Why your credit score matters. Your credit score is more than just a number. It's a reflection of your financial behavior, and it influences how lenders, landlords, and even employers view you. Here's what your credit score can affect: loan approvals and interest rates, credit card approvals and limits, renting an apartment, insurance premiums, even some job applications. A higher credit score doesn't just give you bragging rights, it saves you money. For example, someone with excellent credit might get a mortgage at 5%, while someone with poor credit gets 7%. That 2% difference could cost tens of thousands of dollars over the life of a loan. Understanding and improving your score is one of the smartest financial moves you can make. How credit scores are calculated. Credit scores are typically based on 5 main factors. Knowing these helps you see where you can make the fastest improvements. Payment history, 35%. Do you pay your bills on time? One missed payment can drop your score by 50 to 100 points. Credit utilization, 30%. How much of your available credit are you using? Example, if your credit limit is $10,000 and you owe $7,000, your utilization is 70%, that's high. Ideally, keep it below 30%. Length of credit history, 15%. The longer your accounts have been open, the better. Closing old accounts can hurt your score. Credit mix, 10%. Do you have a mix of credit types, credit cards, car loans, mortgages? A healthy variety can help, but it's not as critical as payment history or utilization. New credit, 10%. Too many credit inquiries in a short period can lower your score. Step 1. Check your credit report. The first step to fixing your credit is knowing where you stand. You're entitled to a free credit report every year from Annual. Check for incorrect accounts, duplicate entries, errors in payment history. Example, Mark noticed a $500 medical bill in collections that wasn't his. He disputed it, got it removed, and his score jumped by 60 points. Errors are common, and fixing them can give you a quick boost. Step 2. Pay your bills on time. This is the single most important factor. Even one late payment can tank your score. Strategies: set up autopay for minimum payments. Use calendar reminders. If you're struggling, call your lender and ask about hardship programs. Example, Sarah had a history of late payments. Once she set up autopay, her score rose steadily over 12 months, gaining 80 points. Step 3. Lower your credit utilization. Your utilization ratio is the second biggest factor. The lower it is, the better. Ways to lower utilization fast: pay down balances as aggressively as possible. Ask for a credit limit increase, without adding new spending. Spread out balances across multiple cards. Example, Jane owed $4,000 on a card with a $5,000 limit, 80% utilization. She paid it down to $1,500, bringing her utilization to 30%. Her score jumped by 90 points within months. Step 4. Don't close old accounts. It might seem smart to close an old credit card, but don't. That shortens your credit history and reduces your available credit, both of which hurt your score. Keep old accounts open, even if you don't use them much. Just put a small recurring charge on them and pay it off each month to keep them active. Step 5. Limit new credit applications. Every time you apply for credit, a hard inquiry appears on your report. Too many in a short period make you look risky. Instead of applying for multiple cards or loans at once, be strategic. Space them out, and only apply when you really need it. Step 6. Build positive credit history. If your credit is poor or thin, you need to build positive history. Options: secured credit cards. You put down a deposit, and it reports like a regular card. Credit builder loans, small loans designed to improve credit. Authorized user status. Become an authorized user on someone else's card with good credit. Example: John had no credit history. He opened a secured card, charged $50 a month, and paid it in full. Within 12 months, he built a 680 credit score. Step 7. Handle collections the right way. If you have accounts in collections, here's what to do. Verify the debt is yours. Negotiate a settlement or payment plan. Ask for a pay for delete agreement, where the collection is removed after payment. Example: Lisa had a $1,200 collection. She negotiated to pay $600 if the account was deleted. Once removed, her score jumped 70 points. Step 8. Be patient, but consistent. Credit repair isn't overnight. It can take months or years, depending on your situation. But every positive step you take adds up. Track your progress monthly. Celebrate small wins, like crossing 600, 650, or 700. Each milestone unlocks better financial opportunities. What a high credit score does for you. Imagine this: you walk into a bank to get a car loan. With a poor score, you're offered 14% interest, your monthly payment is $500. With a high score, you get 5% interest, your payment drops to $350. That's $150 saved every month, $1,800 every year, and over $9,000 across a 5-year loan. That's the power of good credit. It's not just a number, it's money in your pocket. Final thoughts: your journey towards financial empowerment begins with simple, intentional actions. Whether it's setting aside time each week to review your budget or tracking every purchase, these practices will create a more organized financial life. As you start to notice where your money goes, you may even uncover some surprising insights that could inform better spending habits. Remember to stay engaged with your progress. Use apps or journals to document successes and challenges alike. Consider sharing your experiences with others who are also working towards financial literacy, as this can enhance accountability and provide valuable support. Don't shy away from seeking help or accessing community resources that resonate with your goals, as collaboration often breeds innovation. Recognize that every change you make sets a precedent for further improvement in your credit score and financial well-being. Celebrate each milestone on your journey, from the first time you stick to your budget to successfully negotiating a bill. These moments build your confidence, reinforcing that you are capable of achieving your aspirations. When setbacks occur, remind yourself that they are a natural part of the process, and adapt your strategies as necessary. The road to financial health is not a sprint but a marathon. Embrace the learning curve and the growth it brings. With commitment and a proactive mindset, you will be well on your way to reclaiming control over your finances. Ultimately, the goal is to cultivate sustainable habits that not only elevate your credit score but also empower you to live life on your terms. Keep focused, for your efforts will soon yield the fruits of financial freedom. Amidst the journey, remember that financial literacy isn't just about numbers, it's about building a healthy relationship with money. Explore minimalism or mindful spending to appreciate the value of your purchases. Sometimes, the greatest change comes from redefining what wealth means to you personally. By aligning your finances with your values, you create a deeper sense of fulfillment. Furthermore, consider engaging with financial books, podcasts, or courses that resonate with your learning style. These resources can give you insights that transform your perspective on managing money. As you continue to embrace these principles and refine your financial habits, remember that each step brings you closer to mastery and confidence in managing your finances. Trust in your ability to create a secure financial future, for you hold the power to shape your financial destiny. If you found this video helpful, make sure to subscribe and turn on notifications. We have more content coming to help you master your money, escape debt, invest wisely, and build the life you deserve.